All right, I'm finally well rested, and it is time to go ahead and give you some more lovely earnings content. You know, I love me some earnings season so much. You can't say I never did anything for you. That's right, we got 2 videos coming out today. Feeling good, got some rest in. We're going to go ahead and enjoy this one. So, first off, we're going to hit huge news for Microsoft. Big beat. Big beat for Microsoft. Gotta love it. So, Microsoft beat on an earnings per share basis by 14 cents compared to estimates. Obviously, that's good. Gotta love it. Making more profit than anticipated. And revenue was a very big beat, nearly $1 billion beat in revenue, 13.7% increase year over year. And what's interesting is the stock pretty well traded flat after hours. I think it ended up just slightly for the day. It'll be interesting to see where things start at tomorrow. I'm recording this at night. I obviously the night of the earnings. I got some rest before looking into some of these numbers. So just so I could analyze them properly. So what do we have going on here? Obviously, and this is what's lovely here, just a shout out to Seeking Alpha. I mean, I usually use their app, but obviously their website's fantastic too because it condenses all the important bits for you pretty quickly. But obviously, using the Microsoft Investor Relations page is pretty nice as well because they usually have the slides and everything. But normally the slides also get posted here on Seeking Alpha, so that's what we'll be looking at as well. Microsoft wrong color font plus 0.3%. Gotta love when they use the wrong color font here. Sorry, Seeking Alpha. I just talked you up and then you don't know how to do the font right. 14% year-over-year revenue growth, outperformance across all segments, and a slowing Azure growth deceleration. Well, I mean, let's be honest. If we're thinking what could be the reason for the stock not necessarily booming after this, it is Azure because Azure is really what's driving them. It's been a huge factor in what's driving their growth, usually up minimum 60 to 70% every single quarter for the past 4 or 5 quarters. And obviously people are looking at consistent growth. There should be a factor where, I mean, you think investors could wisen up and maybe think that is an unsustainable level of growth, but maybe not entirely. Obviously, there's the Pentagon contract that is still a potential on the table for Microsoft here. We'll see how that turns out, but that would be quite a lot of money for Microsoft if they went ahead and won that Pentagon contract. It would be pretty neat for them. And it's really just between Microsoft and Amazon at this point, so we'll see how that goes. But obviously, if we're looking at Azure, that is a thing to consider, is that cloud contract potentially. But going off some of the numbers they're showing here, productivity and business up 13% year over year, intelligent cloud up 27% year over year, more personal computing up 4%. 63% year over year Azure growth, you already know it. Still rocking it. I mean, I don't know. I wouldn't necessarily call it deceleration. 63% growth. I don't consider it deceleration, but I mean, you can say whatever you want, guys. I mean, if we want to take it that way. I just don't think the stock boomed, and that's 100%, in my opinion, just because of the fact that it's run up so high lately. If we're looking at just the stock price here, I didn't have this pulled up, but if we're looking just over the past, let's just look year to date. I mean, year to date, this is a stock that's already up 35% on the year. If we're looking further out, I mean, if you think about since, it's pretty much, year to date here. I mean, it's things up 36%. I mean, It's had quite a big run up already this year, so I think that is certainly a factor to consider when you're looking at why it's trading flat after hours. But obviously, I mean, trading flat, if you're already invested in the stock, trading flat's better than it going down. Because obviously with such a high run up, you definitely pose the risk of if there's a negative earnings, anything like that's a negative factor. You certainly could see a lot of capital depreciation in a single day if that were the case. That's part of the issue with increased volatility, and I would say it's been relatively volatile this year just due to the fact that it's gained so much. So there certainly is a risk that could be posed here. But still, regardless, my main point is consistent here. Decelerating Azure growth, not necessarily the case. In productivity in business, Office Commercial and Cloud Services grew 15%. Office Consumer up 6%. And LinkedIn increased 26%. So, gotta love it. Obviously, you love your Microsoft Office. Everyone's using Microsoft Office. I mean, what are you going to do? You have a Mac? Come on, get out of here. Don't use a Mac. No one wants Mac. We all want Microsoft Windows, baby. That's right. And we have LinkedIn, obviously. Everyone should have a LinkedIn account, regardless of if you're set in stone about where you want to work for a living. You should have a LinkedIn account too. It's just important to have resources and get people out there in other fields in case you need to make a change in your life and go somewhere else. LinkedIn's a fantastic place to market yourself as an employee. So any sort of executive position, I mean any position, regardless, I would say have a LinkedIn. It's important to have, not just because I want you to make that look better for my stock price, but I just saying. I'm just saying. Capital expenditures totaled $3.39 billion, which is down. That's right, down in terms of expenditures. I mean, that's a good number. $3.4 billion versus expected $4.2 billion in expenditures. I mean, in my opinion, $800 million not spent is a pretty good number. Again, I'm not saying that I maybe wanted this stock to jump pretty high, okay? But I can't be too upset, as long as it's not downward. But still, I think there's reason for it to be positive growth, and maybe that might hit tomorrow, obviously since they posted guidance, which is what we're looking at now. Quarter two guidance during the earnings call. Yes, they did, baby. So we'll see how this trades tomorrow. I think it's going to trade up pretty well, around 3% up maybe, in my estimation. Obviously, I'm going to be posting this somewhere around 10 in the morning, let's say, Central Time. So we'll already have a good idea by then. But revenue on the upward side of this consensus, actually. So that's pretty exciting. Obviously, we could see anything on the higher end here. Consensus is $11.36 billion, but their range is pretty decent there. A little bit on the higher side. Intelligent Cloud, way above their consensus. Again, fantastic for them. Personal computing, below consensus. That is a thing to consider, but obviously that's not necessarily the revenue of the future for them. Really, Intelligent Cloud is what their future is, and you see that a lot with Azure growth. That's really, that kind of growth. Cloud growth is really what's going to be driving Microsoft. Selling computers, maybe not the same. But let's see. Double-digit revenue growth again. Love it. Unchanged operating income growth. Operating margin should increase slightly year over year. Gotta love it. So let's take just a quick dive into the slides. Make it pretty quick. I'm not going to go too absurd. Look at this, Seeking Alpha. You posted the slides and everything. I love it. All right. Again, here's just what we already went over here. Growth of revenue, 14%. Love it. Gross margin. There's a growth. I mean, 18%. It's what I like to see. Gross margin percentage, and again, a lot of that margin percentage is really just driven through cloud. That's where profit margin is. I mean, that's where these tech companies make money usually. It's not in products themselves. It's in, creating the pathways for people to make things. It's all of these architectures that really set in stone what we can do, and how they make money. So operating income increased. Love that. 27%. So $12.7 billion. Oh, they're printing money. You know how I love to say printing money. Love when they're printing money. And net income of $10.7 billion. Gosh dang. 21% growth year over year. Hey, you know me. I love when companies are printing money. Microsoft here, they're printing some money. You already know it. Bookings growth year over year. Love it, love it, love it. You gotta love to see these booking growth, and that's continued improvement. Commercial cloud revenue. Look at that steady growth. Commercial cloud gross margin percentage, steady growth in margin percentage. So you're just making more money. I mean, you're what was that? Increasing your revenue, but all the while, you're also increasing your profit margin, which means you just make more money. I mean, that's lovely, right? In my perspective, I love it. I love everything about it. The financial returned $7.9 billion to shareholders. Gotta love it. $4 billion in share repurchases during the quarter, which helped drive the stock up, and $3.9 billion in dividends. So, gotta love that. I love that they pay me a dividend to own them. So that's what big shout out to Microsoft. I really like them. Let's see, operating expenses were up slightly. Investments in cloud and artificial intelligence, which is fine. Certainly fine. No issues there. Effective tax rate is 16%. That's fantastic for them. Absolutely fantastic for them. Cash flow was $13.8 billion. Gained more in cash. Free cash flow of $10.4 billion. Again, printing that money. Office 365 subscribers up to 35.6 million. You know it. LinkedIn revenue growth. Dynamic products and cloud service revenue grew 14%. 365 revenue growth of 41%. Love it, love it, love it. Azure revenue growth of 59%. Okay, so let's keep that up. Obviously, there will be slowing Azure growth in the future. There's no doubt about it. Obviously, you can't just keep posting 60 to 70% growth consistently. That's not how business works. I mean, if you did, then this is going to be a $500 trillion company or something. I mean, that's just, you can't just post growth like that consistently. Nearly doubling your your revenue on it every quarter. There's time for it to see how that goes. So obviously they have Xbox as well. Xbox content and services revenue is relatively unchanged. Again, it's been a very weak year for video games, as I've mentioned before. So that's a factor there. We'll see that change next year when they release the new Xbox. We'll see how that affects sales. Surface revenue, Surface tablets declined 4%. Again, it's not that major a part of their business. They're really focused on cloud right now for the future. Love charts. Everyone knows I love charts, right? Who doesn't love charts? Look at these. That's positive charts. That's what we like to see. Just consistent growth here. I mean, what more do you want to see? I mean, just consistent growth, and I love it. We love everything about consistent growth. What else do we have for us? So, more highlights, you know it. LinkedIn sessions grew 22%, even record levels of engagement in job postings. Yeah, that's right. Get yourself a job on LinkedIn, please. I'm considering it. Don't tell anyone I said that. Um, Ooh, charts. Love these charts. Love them, love them, love them. Consistent growth. Look at these. Consistent growth. Keep it up, baby. Keep it up, baby. Um, so, again, here we go, showing a little bit of deceleration there. And that's what they're calling for, which is nothing to be scared about, in my opinion. A little bit of deceleration when you're still posting a 60% increase. Heck, that's fine for me. And obviously Q2 is what they just reported here, so these are what we're expecting in the future. So obviously, not bad in my opinion. I mean, a little bit of a broad range in the future of what might happen. I don't find an issue with it, though. Frankly, I don't find an issue with it. That's my opinion on the matter. So I think they're planning for a little bit of deceleration, but that's just natural. That's just how life works. I mean, what do you want? Can't grow 70%. I mean, gaming revenue declined 7% again. Very weak. Very weak. Weak year for sure. Weak couple of years for gaming. So, search advertising revenue grew for. Look at that. I mean, that makes sense. Higher revenue per search. Gotta love it, love it, love it. And appendix. You know what that means? We're looking good. My final bit to look at would be. Let me just go down here. I'm gonna do it just to prove to you guys how much I love this. So my question now, obviously after these earnings, you're like, well, is it a buy? Do you buy this stock? I hate to say it, but I don't know. Look at that. Obviously, they have a lot of debt, but I love showing it. I love showing debt and cash. They have plenty of cash to cover any debt. They have $50 billion extra dollars worth of cash to cover any debt. But the question about buying this company, yes or no? Forward PE of 23. Price to expected growth, not absurd. I think this is not necessarily an absurdly overvalued company at this point. I do think this run-up is a little bit extreme for the year. Again, looking year to date, I mean, this is just on a tear. So, in my opinion, I would hold off on purchases of these shares. If I could get around to the 120 range, I'd be all in. I'd be putting buku bucks in Microsoft. I just think they're a little bit too high right now in valuation for my taste, but I still think it's a fantastic company, especially, company with 35% payout ratio, annual dividend rate of 1.5%. So they pay me a dividend, and it's not really affecting their balance sheet at all. So I'm going to be holding them in the meantime, even if I think they're slightly overvalued. No worries there. So that's my perspective on it. So I hope you enjoyed, and we'll see how things go today. If we're up 3%, 4%, we'll see. I'm interested to see how people react to those estimates for forecast of Q2. So we'll see. Alrighty.